Losing a spouse is, without a doubt, one of the hardest things anyone can go through. But then, on top of everything, a new crisis can pop up, one you never expected. All of a sudden, you're locked out of your own financial life by the IRS. So in this explainer, we're going to give you the key to unlock that door, and we'll do it step by step. You know, it usually starts just like this. You go to log into your joint IRS account, maybe your tax software, something you've done a million times, and you're hit with this wall. Access denied. Verification failed. It's confusing, it's frustrating, and honestly, it feels personal. But it's not. You've just run into something called the digital lockout. So let's be really clear about this. The digital lockout is not your fault. It's an automatic safety feature. The moment the Social Security Administration is notified of a passing, it sends an alert to the IRS. And the IRS, in turn, instantly freezes the account. They do this to stop a specific type of fraud called ghosting, where criminals try to file fake tax returns for people who have passed away. It's a good system for security, but it has this unintended consequence of locking out the surviving spouse.
Okay, so you're probably thinking, well, why can't I just use the same login and password we've always used? And that is a perfectly logical question. The answer, though, has to do with a piece of modern technology that creates a real catch-22 for survivors.
See, the IRS now uses this verification system called ID.me. And to prove you're really you, it asks for something called a Liveness Check. Basically, you have to take a little video selfie with your phone or webcam. And right there, that's the heart of the problem. A person who has passed away can't take a selfie. It means their digital identity, for all practical purposes, is just gone forever. That's why you can't get in.
So how in the world do you get back in? Well, it's not with a password. It's with something we call the survivor's key. And as you can see here, this key isn't just one thing. It's a three-part solution. You have to establish your authority, you have to prove the identity, and you have to get the execution just right. So let's break down each one of those pieces.
Okay, part one of the key is all about establishing your legal authority to act. And the tool for that is IRS Form 56. This is an absolutely essential document that unfortunately a lot of people miss.
So what does this form actually do? Well, think of it like this. Filing Form 56 is like sending a direct order to the IRS computers. It tells the system, hey, stop seeing that deceased flag and instead recognize me as the fiduciary, the person who is now in charge. This is so important because it ensures that any letters or notices about your taxes in the future come straight to you. Now, filling this out correctly is key, especially in the most common situation where you haven't been appointed by a court. First, it's simple. You identify the parties involved. Then, for step 2, this part is critical. You'll check box 1G for other, and you need to write in that exact legal phrase. It's what establishes your right to act under the tax code. And finally, for step 3, do not leave this blank. Don't just put the year of death. You need to list the 3 prior tax years too. This covers you in case there's ever a question or an audit on a past return.
All right, so you've declared your authority. Now you need to prove it. This brings us to the second part of our key, the death certificate, and how you use it.
When you file Form 56, the IRS needs proof. And while sometimes a photocopy might be okay for other things, for this specific form, the best practice is always to send a certified copy of the death certificate. Why? Because it prevents any questions, any processing delays, and ensures that the IRS accepts your new status the first time around. Now, how you send these documents really matters. You always want to use certified mail with a return receipt. That way, you have legal proof that the IRS got it. Also, be aware that the address where you send Form 56 might be totally different from where you mail your 1040. And here's a little practical advice. When you initially request death certificates from the county, get 10 or 15 certified copies. You will be amazed how many places ask for one. Okay, I need everyone to listen very carefully to this next part. It is a critical warning, and it goes against what might feel like common sense. Do not attach the death certificate to your spouse's final 1040 tax return. And here's why. The special way you're going to sign the return already tells the IRS what's happened. If you attach the certificate when it's not needed, it basically kicks the return out of the fast automated system and puts it in a huge pile for manual review. This simple mistake can delay your return and any refund you're waiting for by several months. And that brings us to the final piece of the survivor's key. This is the moment you actually turn the lock, signing the final tax return the right way. If you get this wrong, the system can reject the return instantly. Okay, so how you sign depends on if you're filing on paper or online. Let's start with paper. First, you sign your own name on your usual spouse line. Then you sign your name a second time on the line for your deceased spouse. And right next to that signature, you have to write filing as surviving spouse. Now for e-filing, it's different. The software will ask you if the taxpayer is deceased. You just say yes. And then, this is the most important part, you use your 5-digit PIN and your date of birth. Don't use your spouse's old PIN. Your information authorizes the whole return for both of you.
So now you have the key, and you know how to use it. But let's quickly talk about a common problem that can jam the lock, even if you do everything else right. I'm talking about phantom income that shows up after your spouse has passed.
This is officially called nominee income. Here's an example. Your bank sends a Form 1099 for interest earned all year, and it's all under your spouse's Social Security number. But some of that interest was actually earned after they passed away. To the IRS computers, this looks like a mismatch, and it will automatically flag your return.
But there's a really elegant way to fix this. Here's what you do. On Schedule B of your tax return, the first thing you do is report the full amount from that 1099. That makes the IRS computer matching system happy. Then, on the very next line, you write nominee distribution, and you subtract out the portion of income that actually belongs to the estate or to you. It's a simple accounting step that zeroes everything out, shows the IRS you're handling it correctly, and stops those automatic notices from being sent.
So let's just recap that survivor's key one last time. It's 3 simple, powerful steps. First, the authority. You file Form 56 to tell the IRS you're in charge. Second, the identity. You mail a certified death certificate with that Form 56, not with the 1040. And third, the execution. You sign that final tax return correctly as the filing as surviving spouse. You know, it's so important to remember that this whole thing, this digital lockout, it isn't a punishment. It's a security measure that's really there to protect you. It might feel like a big, frustrating barrier, but it's not personal. And now you have the right key, assembled in the right order to unlock that door and move forward.
You now have a clear path forward. You're holding the key. So the only question left is, what's the first door you're going to open?